Hello and welcome everybody to today's very special session, live commodity market analysis with the Gold and Silver Club for the 7th of January 2016, presented by myself, Phil Carr, at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. A lot has been happening already in the first trading week of 2016. During the live session, I will be covering an overview of the commodities markets. We'll be looking at the top trades of the week. I'll cover live market commentary and technical analysis. And of course, we'll be answering any questions. Do keep those coming in the chat function as well. So before we get started, let me introduce you to the Gold and Silver Club. We are an international commodities trading research and advisory group specializing in the precious metals, the energies, and the agricultural markets. We are recognized as the leading go-to authority on commodities. As internationally respected experts, our analysis and opinions on the metals, the energies, the agricultural markets, they're routinely sought by major financial television channels, publications including Bloomberg, Reuters, CNN, Global Banking and Finance Review, and the Wall Street Journal, to name a few. Our team of experts has advised and taught technical analysis, fundamental research, and portfolio management to more than 75,000 private and institutional clients worldwide. So for more information on the Gold and Silver Club and our expertise, please do visit our site at just www.thegoldsandsilverclub.com. So what we'll do, we'll take a look at gold first. Gold has actually just broken out to $1,100 per ounce. So we've seen some incredible moves on gold actually over this week so far. So it's been beautiful to see gold break out so well already. So gold has actually broken out to 9-week highs today, as worries about China has hit stocks. Palladium hit its lowest level since 2010. We've seen what is known as the January effect so far occur on gold, where we see significant breakouts in the first week of the year. And I'll go through that in a little bit more detail. I just want to highlight that the gold's currently trading at 9-week high, $1,100 per ounce. We'll be covering that in detail during today's session with you. So gold currently at $1,100 an ounce at 9-week highs. So it's perfect time to be on today's session as we go through a little bit more detail where we can expect gold to head next, as well as the other commodities. Now, the top trades of the week so far using the Gold and Silver Club signature trading strategies. You can probably guess that gold, we continue to be in a buy position. We've been anticipating this breakout for quite a while now. Gold did exactly the same thing at the beginning of 2015 and 2014. We saw this January effect rally. This year slightly different because we've got more geopolitical factors which were helping gold to get more of a safe haven bid at the moment. So far, our first entry of this week is up 330 points. We had an indecision candle from last week, which broke out to the upside. We've entered into the trade and we continue to rally into right now, actually, as we go into the US session. Do note we've got non-farm payroll tomorrow, so we're bound to get more explosive moves. But at the moment, gold is still rallying, still looking good for potentially a little bit more upside as we go into the US session. I'll talk about that in a little bit more detail. We've been in sell short positions now on Brent crude oil since the OPEC meeting on the 4th of December. So we continue to add to this sell short position. It consolidated over really the Christmas holidays, but pleased to see it break down again. We've entered in for yet another sell short on Brent and also WTI crude oil so far, delivering yesterday. Quick day trade in and out on Brent. We've also got our longer term positions on, but this was a 210-point breakdown, broke key support. You can see it sold off really nicely. And also same on WTI, very clear technical setup. We've broken through key support, broken through the swing lows, and oil now is at 12-year lows, which we'll have a look at very shortly as well. So for us at the Gold and Silver Club, it's been a great start to the year, and I'll be assisting you guys with some of the technical analysis on that. As always, feel free to keep any questions, comments coming as well as we go over to the technicals. So what I'll do, I will bring out my charts for you. First of all, I'll have a look at the gold market. I'll look at gold in two different ways. Okay, so we look at this on more of a raw chart, and I'll just give you a little bit more of an expanded view, a little bit deeper. I don't normally do this, but I want to just show you on gold with a few more indicators here exactly what we're looking at right now. You can see our first entry at the moment, $1,075 per ounce, has broken out really well. We're well above a 1-to-1 to 1 at the moment. It's about 1.5 to 1. Stop loss just there above the recent swing low. Currently sitting 1,100 US dollars per ounce, 1,101. You can see the next stage of this trade would be a 2 to 1 at 1,011 US dollars an ounce, a 3 to 1 at 1,130, and then we potentially start coming up to the 200-day moving average. Now, I don't expect it to just keep going up in a straight line. We do have non-farm payroll tomorrow. We are getting a little bit overextended, but gold has replicated the move at the beginning of 2015 and 2014. We definitely see this January effect starting to come into effect yet again. So in terms of the technicals, what can we look at here on gold? Well, gold, certainly you can see it's had a nice basing formation, produced a double bottom over the end of November into December as well. So we've had that double bottom formation. What's really important here on gold is at the moment, gold, typically when you see gold rally at the start of the year, it does so only really when it's had a significant pullback right at the end of the year in December. So we've started off the year for gold. Gold is 10% down in 2015. It came down, tested its 5-year lows over December, tested those over the FOMC statement in December as well, and it's coming off those lows. So for a lot of traders at the start of the year, this is a very straightforward trade. Your stop loss is pretty tight. It just goes below the swing lows, goes below the 5-year lows for gold, and then take advantage of a potentially a lot more upside here. And you can see gold really getting bid at the moment, $1,102 per ounce. Also noteworthy is it's broken and closed above the 50-day moving average. And we've finally cleared above all of this zone of resistance. There's been a lot of resistance on gold here around the 1,088 zone, which we toyed with yesterday, finally broke above it. We've also taken out these swing highs going back to November. So you can see here gold breaking out to 9-week highs at the moment. It's also broken through the critical support of September 2015. We've now cleared above that zone, and we're coming in for the next technical resistance zone sitting around $1,111 an ounce, which takes you up to the 100-day moving average. So for me at the moment, gold is a nice little trade. We continue to be long. In fact, whilst I'm on this session, it's already rallied another 20 points. So we're staying in gold at the moment. We're going to stay into this for a longer term position, and we'll also take advantage potentially of more breakout and explosive moves on tomorrow's non-farm payroll, which should be a good one. So gold at the moment, definitely in play, definitely favoring more upside. Look, it's really rocketing right now, $1,104 an ounce. The US dollar is selling off at the moment as well. I would keep an eye on silver. If you've missed this whole move through gold, I would then move your attention over actually to silver right now. So silver at the moment is starting to develop a nice little pennant formation, and typically silver's not far behind gold. Okay, so I just show you, this is a bit more detailed with my indicators, but I'll just show you this on a raw chart just so you can get a better perspective here for silver. So here's the pennant formation on silver. So silver is usually, we've got a lag time. Either gold is leading silver or silver's leading gold. You've got about a 2-day lag time on these markets at the moment. Now we're consolidating on silver. I would anticipate if gold keeps on rallying the way it is, it might not happen till tomorrow's non-farm payroll now, but I would be looking for a nice breakout trade here on silver as well. I'm looking for a breakout of this pennant formation. Silver also, it's coming off its 5-year lows. It's pretty decent risk reward on this trade. A lot of traders, if they're looking to get into this trade for a potentially longer term position over the month of for the rest of January, really, you've got a pretty good risk to reward here. Let me just show you that a little bit more clearly. So traders just getting into that, putting their stop loss just below the swing low. You can see the potential there for quite a good risk to reward, taking up to a 1-to-1, 2-to-1, 3-to-1 until you really come into significant resistance. Just depends how much further we're going to see really the metals rally at the moment. So silver, I do like the price structure of silver. I do think it's going to follow gold next. If you've missed the gold trade, I would expect there is potential here for a silver breakout as well. So, right, I'll slow down a little bit and I'll just move it back to the fundamentals. So let's see what is going on at the moment in the markets. Okay, so the overall context of the markets, a lot has gone on already in the first 4 trading days of the year in 2016. So the headline news, gold at 9-week highs as China worries hit stocks, palladium hit lowest level since 2010. So we've seen gold, US futures climb above 1,100 US dollars per ounce. European shares have tumbled. Asian stocks fell to 3-month lows. China's central bank buys 90% of gold in December. So gold climbed above $1,100 an ounce for the first time in 9 weeks on Thursday as the dollar fell and investors channeled money into safe assets as worries over the Chinese economy hit global stocks. So European shells fell sharply after China accelerated the depreciation of the yuan, sending Asian shares to 3-month lows. The Chinese stock markets, this is very important, fell 7% on Thursday after less than half an hour of trading, triggering a circuit breaker that has suspended trading for the rest of the day. Okay, and we're seeing that bid go right into gold at the moment. Gold rose to a 9-week high, $1,102 an ounce. I mean, it's above that now. It's just come up to $1,104 per ounce at the moment. And we've seen gold futures jumping to a 4th straight session to a 9-week high. So gold strength is probably going to be relatively short term, but there is an upside risk to gold. Now that's important, the upside risk to gold here. If the view that China is going to pull the whole world into recession becomes stronger. So at the moment, we're seeing breaking out to 9-week highs right now. Now, there is a potential for a pullback on gold over non-farm payroll. But if we have a look at other points here for gold as well, which are supportive, gold often seen as alternative investment during times of geopolitical and financial uncertainty, which we have at the moment, has benefited from the risk-averse sentiment in the market along with other haven assets such as the Japanese yen, US treasuries. Gold is clearly re-establishing its role as a safe haven for as long as global stock markets, in particular China, appear wobbly, which they are at the moment. Gold is likely to attract a gold bid. And also, you can see over here, China added more gold to its reserve in December, bringing in total purchases in the second half of 2015 to more than 100 tons. So we've seen some significant moves on that as well. So ultimately, gold is looking strong here. So as we come into the end of the week, and we'll have a look at the technicals here on gold on the weekly chart. I mean, look at that weekly chart. You've got this downward trend channel, which has really been in play going back to 2013, and you can see what a move that we've had just on the weekly. This has been pretty incredible, really nice firm breakout trade. You can see where we've based here at the lower end of the trend channel, the weekly looking good. I mean, let's have a look at the monthly. Even for the monthly, we've now breached above last month's highs. We've held on to critical support. So this was the major resistance zone going back to 2007. This was the major support of 2009. And now you can see we're just coming off these levels from 2015. So you've got this major supportive zone. Gold is really off to the races at the moment. You can see on the weekly chart, if we were to close around these levels, we're essentially closing above 9-week highs here. It's been a very significant move. And then we'll probably start to consolidate a little bit after that move. But ultimately, there is potential for gold to make a run up to the upper end of its trend channel. It's got two parallel trend channels just overhead here as well. So you've also got this other trend channel just overhead where we could rally up to again over the next 2 to 3 weeks. So that's all worth bearing in mind at the moment. So ultimately, at the moment, gold looking pretty good. I'm looking at the next major resistance level here at 1,100 US, 1,111 US dollars per ounce would be really the next significant level, which I'm looking at in order to see gold hit some sort of resistance. So that's still got about another potential for about another 60 to 70 point move higher here. Okay, so that's what we're looking at on gold at the moment and also on silver. So both of those markets looking quite lucrative. Now, I want to, of course, take your attention over to oil, which is in firm focus at the moment. And again, we'll just go over to some of the fundamentals here on oil, just so you are up to speed, just in case you're not, on what is going on right now. So oil has slid below $33 to 12-year lows as the turmoil in China has rattled investors. Brent and WTI have fallen more than 5% before trimming losses. US crude oil is at its lowest level since 2003. And we do see there's some potential here for even further downside at the moment. So it's been a tremendous move already in the first week of the year. Brent falling more than 5%, about $2 per barrel to lows of $32.16 per barrel, a level not seen since April 2004. Very significant moves. The price of oil has shed around 70% since the current downturn began in June 2014, causing pain to oil companies and governments that rely heavily on crude revenues. Okay, and we're seeing that certainly in the Middle East, tensions are building. If you have a look at the moment in terms of the technicals at the moment, we are coming down to a major level, and we've really had a great opportunity. We've been trading oil significantly for sell short positions since the OPEC meeting on the 4th of December, which really was the green light to sell oil at that point. We've broken down significantly from the 4th of December. We're up over about 1,200 points now on our longer term trades here on oil. But in the short term, there's also been a lot of day trade opportunities. So if you have a look at the moment, we'll just go over, just double check we are on Brent crude oil right now. You'll see Brent has actually taken out the lows from 2008. It's currently sitting at $32.50 a barrel. We're coming down and we're hitting these previous resistance levels from 2000, and this also represented a resistance zone of 2002. So there is some support around this level, 32.50, and we've had a bit of retracement off that zone today, which has not been too much of a surprise. Now, what I would anticipate next is if we do break below that level, you've got really next psychological support at the round numbers of $30 per barrel, which could be the next major level. It is a little bit overextended now. It's already had a pretty decent sell-off over the first 2-3 days of the trading year at the moment. So I'm looking now for potential retracements, adding to positions each time. So essentially, I'll be selling into any rallies on good confirmation just to take on some additional opportunities here. So you can see here we've had another consolidation after we've broken down significantly, following on from OPEC, consolidated over the Christmas holidays, and then this week it's just been back to the same as usual, as more traders have just added onto their sell shorts. They've added to these positions. We've seen a nice little breakdown at the moment. So essentially, oil for me, I'm waiting for the next trade setup, as well as the longer term positions which you've got on selling. I'm looking for a retracement back, potentially back towards the 35. Two ways that oil is really good at the moment. Either it consolidates, so it keeps consolidating and then offers a breakout of a flat level, so you see a breakout of support like we have there, 35.92, or it retraces, so it could come back to test the previous support. That becomes new resistance. Then we take that for a sell-off in combination with some sort of rejection candle around that zone. So that is what I'll be looking at as well. So those two scenarios is really what I'm keeping an eye out for at the moment, as well as the longer term positions. That is on Brent crude oil. We take it over to light sweet crude oil, and you do need to try and really get as much data as you can at the moment on oil. It's not really enough to get just a couple of years worth of data. You really need to be going back relatively far. I'm just going back to about 1991 at the moment, just to show you longer term where we can expect the next major levels of support here for oil. You can see, in fact, on WTI crude oil, it's coming down to test where it's breached actually its 2009 lows, but it's sitting around that level at the moment. You can see there is quite a lot of consolidation from 1999 through to 2003 around that resistance zone turn support. So we could again be at a point where we do see some profit taking at this zone. Again, I'm looking for either consolidations and then a breakdown lower, or retracements. I'm not really expecting oil here to bottom out until February. In terms of oil's seasonal tendencies, that is a time of year where you would typically start to see oil really manage to bottom out. And if you have a look at the past few years, this is typically a time of year where you have seen some good moves to the upside over the end of January into the beginning of February. It's quite a lucrative time to potentially start looking for a bit of a bottom to form in the markets. So that is what we're anticipating at the moment, but certainly for the next 2 to 3 weeks, I am looking either for consolidation or a little bit more weakness here on oil. But it's been a great start to the year. If for those of you who've been bearish for oil, it's been very lucrative. Okay, so what we'll do now, we'll have a look and we'll just go over to the correlated market with oil, which is copper. So copper, no surprise here, has also had quite a good pullback over the last week. It's just toying with major support here. On the weekly chart, you can see here where it's just coming back towards major support as well. On the monthly chart, we're starting to break down we're having a retest of the lows from 2015 here. I want to see if we get a break and a close below that level. If so, copper could open up the gate for more selling pressure. You can see very clearly, nice little box formation, consolidation. I want to see just confirmation, a break below support. If we get that break below support, we could really start to build up momentum to the downside. So for me, copper is one to have on the radar. It's not one which is ready for a trade yet. Silver, I'll be having a look at in a lot of detail tomorrow, just prior to non-farm payroll, keeping the gold trade running just for now. If we move it over and have a look at platinum, it's not benefited as well from the January effect as we've seen gold. It started off the week well, broke out from resistance, it's pulled back a little bit. There is a bit of a supportive trend channel just underlying platinum at the moment. So I'd really like to see whether we are going to see this level supported. If I just take it out and just put it onto, let's have a look, we can just change this and put it onto a line chart just to make it a little bit more visual for you. Let's do that. There you go. You can see ultimately we'll just draw on this overhead trend channel based on the closes. We'll put it back in. There you go. So you've got your parallel trend channels there at the moment, essentially for platinum at the moment. So we're just ricocheting between those levels. If we do find support at the lower end of the trend channel, build a rejection candle into the close, a hammer candle, there is scope there for a potential buy opportunity on platinum if we continue to see good momentum with gold, and if we see a breakout on silver as well. So I am keeping an eye out for platinum, but it's not quite ready yet. So still all eyes on gold in terms of the metals at the moment. Now I'll move it over to the grains. First of all, we'll take a look at wheat. We've been in a sell short for wheat for a couple of weeks now since the Christmas holidays. So we've been selling short. Essentially, we broke down. We had this nice rejection candle, came up to retest the 499 zone, found rejection, broke down from there. Nice confirmed close. We've just really been consolidating within a trend channel as well, actually, on wheat. So wheat is really just moving between a nice downward trending channel at the moment. So I'm ultimately looking to see whether we are going to get a little bit more downside here on wheat. You'll see it has broken below this supportive layer just on the left of the chart here, where we could start to anticipate more downside. So ultimately, bearish at the moment on the grains. There might be limited. I'm not looking necessarily for a huge move here. I just really want to take it back down to the lower end of the trend channel, potentially come out of the trade at that zone, just see how it responds if it comes back down to the lower end of the trend channel, from there looking to bank some profits really. So I will see whether we get that kind of a move on wheat. So it's certainly something I'll be looking out for. Just by the way, on that as well, I get a lot of questions about this, about our live trade setups, where you can see them. So we've got open positions at the moment on these markets. We've got open positions essentially on gold. Let me just bear with me very quickly. Let me just see if I can show you these. Okay, so just to give you an example here, just from our private members academy, you can see here open position that we've been on wheat here, entry 47,125, just a stop loss and so forth. This is one of our positions. Gold, we've got a nice longer term trade. This is the trade that we actually took earlier on this week, so you can see very clearly there. This is our entry on the trade initially from this week, 1,075, and we've now got we've removed the take profit on that and continuing to ride this trade. So now you can see it's broken out to about $1,104 today. So it's looking really good. So I get a lot of questions on this, how you can actually get those trades. So I'll continue with the analysis in just a second, but just to answer some of those questions, essentially at the Gold and Silver Club, if you just go over to www.theprivatetradersclub.com or the Gold and Silver Club.com/join, either of those links, I'll probably share the link at the end there with you so you can just see it. Essentially what we have available at the Gold and Silver Club, we've got a Master the Markets trading course. So that is essentially a course which gives you a very thorough understanding of commodity markets, along with proven fundamental technical trading strategies. So these are really exact powerful trading methods that professional traders, investment banks, hedge funds use. So you'll probably see when we're talking about the markets, we're having a look at Reuters. Obviously we've got news feeds which are updated real time throughout the day, so we know exactly where the big money is going, where the funds are positioning themselves. We're well aware of where to be positioning ourselves, especially for the longer term trades as well. So we very much trade in the same way the investment banks and hedge funds do from that perspective, and on the higher time frames as well. Very comprehensive commodities trading program, and it really teaches you everything from just the strategies, from the fundamentals, the technicals, the indicators that we use, how to set up your charting platform, how to do all your technical analysis. And then of course you get access to the live trade setup. So that's just going back to the trades that we take, very transparent. Every trade that we take is emailed out to our members and also provided on the membership forum, so you can see entry, exit, take profit, any changes that we're making to the trade. So if we're trailing our stop loss, everything's really transparent. So it helps with the implementation. So it really allows you to take trades and to get into those and be able to see exactly what we're doing with those trades as well. So it really helps you to get a very high level of accuracy on your trades, and that's really the implementation. So the course, the online course, which by the way you can do in your own time, module by module, all in chronological order, step by step, you can go through the online course, is there for the theory, and then we've got the implementation. And we also include the inside track, which is a week ahead trading plan, which is where we go through the thorough analysis of the markets for the week ahead. So we prep all of our traders. So we've been anticipating this January effect move for some time now. We've gone through thorough preparation the weekend, anticipating a gold breakout based on a lot of different factors, but particularly seasonality factors and also geopolitical factors. And it's moved nicely. So you can see we're well into profit on those trades at the moment. So we provide that for all of our traders at the weekend, so they're prepped for the week ahead. And of course, live technical analysis videos. I've just come off my live trading room this morning with all of our traders. We've been going through trade management of our open positions, what we're looking to do as we go into non-farm payroll tomorrow. We'll be trading non-farm payroll live with our traders tomorrow as well. So there's opportunities to join us trading that live as well, just via the private members academy. And of course, you get VIP email support, so you're not left alone. You're always supported. We always provide a very high level of support for all of the traders at the Gold and Silver Club. So every single question, query, whether it be about the trading course, technical setup, everything is answered. So I'll just quickly just show you how you do that. So once you're on, it's just www.theprivatetradersclub.com. Once you're on there, if you'd like to find out more information, just go to enroll here now, and you'll just have an application form. You just need to fill in that. Make sure all the fields are completed. You'll need to make sure every single field is completed, quick to complete. And once you've done so, just make sure you click on apply now, and that will just make sure that we receive your application. Then we'll get in touch with you ASAP. Okay, so that's just how you do that. Again, it's just www.theprivatetradersacademy.com or www.thegoldensilverclub.com/course form. Okay, fantastic. So I thought I'd just go through that, a few questions on that. So we'll continue. So I'll go back to the technical analysis. So again, just transitioning onto that, we've got a wheat trade which we've been opening over the last couple of weeks, which we are still in profit on at the moment, just letting it run it. So it's in over 100 points of profit at the moment. So we are letting that trade run its course at the moment. So we're looking for more downside here. We're essentially looking for a breakdown and coming down to the lower end of this trend channel. Okay, so wheat at the moment, positioning ourselves for more downside. Now, if you go over and have a look at corn, I really like this overall price structure as well. So I'm looking for corn to break down from its swing lows here. So essentially to break down from the weekly lows. Corn has been breaking down. It's also broken through several layers of support. So previously, throughout 2015, we saw a lot of ricocheting on corn between the 355 level up to the 382 level. Okay, so we saw key support at 355, key resistance at 382, and we continued to ricochet. Now we finally broke that level last week. Well, actually this week we tested the level last week, broke down from that level this week, and I also see corn as a good selling opportunity here, particularly if we break below yesterday's low. So you can see we broke down, we closed below support, we're just consolidating. All we really need to do now is break support here, and we'll get another wave lower. You've got that psychological zone at 350 at the moment for corn. If we break below that level, that is exactly what we'll be looking at in order to go for another sell short opportunity. So all I really want to do there is just see us break through that level of support, and then we'll be looking to then get into corn as well for a sell short. Now, the other market which is also worth having a look at on the agricultural front as well is soybeans. So if you have a look at the price structure of soybeans, you can see we're very similar also to corn and wheat. We've broken down, we've come right down to the lower end of this supportive zone. So we're sitting around 850. We're not too far. This is the major support at 853 at the moment. If we come down, break below that zone, break below the weekly lows here, and particularly you will see, actually this is perfect to actually go out to the higher timeframes here at the moment. So if you have a look at the much higher timeframes here, you'll see soybeans at the moment, it's coming down to retest lows, which we've not really seen since 2008. So we're coming down to those major lows, about 7-year lows at the moment. If we get a break and the close below the 845 zone, we could really start to pick up some good momentum. Soybeans definitely on the radar. We've got alerts set up for that level, and you'll see again, just going over to the higher time frames, this will be a key level. We've got a little bit of more support just below here, not too significant, but you've got some swing lows about 840, but beyond that zone we could really start to pick up momentum. So we've got alerts ready to go there on soybean. We don't have a sell short on at the moment. We're just well aware that if we break and close below, particularly around the 850 zone, this is going to open the gate up for more downside. It could be that we just get supported at that zone, in which case if we do get supported at that key level of support, we'll be looking to take a buy opportunity at that particular level. So if we do get supported at the 850 zone, we get some sort of strong rejection as we did at the end of November, we'll be looking for a buy and just take that back up to key resistance as well. So for me, we're coming to a very key event area on soybeans. It's definitely also one that you want to have on your radar. So corn, wheat, I'm favoring more downside at the moment, and also soybeans, if it does break and close below major support, I'd be looking to take advantage of that for more downside. So a break and a close below 850 and really looking to take advantage of a selling opportunity. So that is one for your radar as well, just on the agricultural front. Now, also, if we go over to coffee, coffee's been quite an interesting one. In fact, let me bring out coffee. I'll just add a little bit more technicals on this just to really show you what I'm looking at here for coffee. Coffee essentially has come down to our buy zone. So coffee is getting a bit of a rejection candle. You can see this is a buy zone for us on coffee. We're looking for the potential for a buy around this zone, the 117 level. If we do get supported at this level, you can see a nice little rejection candle forming. I would be looking to take coffee back up to its resistance zone. There'd be a good risk to reward there just to take it back up to key resistance. So coffee for us is definitely one that you want to have on your radar as well. If we do get a nice rejection candle form at the lower end of this support zone, we are going to look for a buying opportunity. You can also see here on coffee, the risk to reward on that is quite decent. So in terms of the risk to reward, you can see just positioning a stop loss just below the swing low there, you've got the potential for quite a nice breakout trade, just taking it back up to resistance here. So I'm looking also for an opportunity to trade coffee as well. So keeping a very close eye on that market too. Now, just going back to the energies, the other market which is just worth having on your radar at the moment as well is natural gas. Natural gas consolidating. There are the natural gas storage inventories coming up this week. So on that inventories, we could expect a potential resolution of this consolidation. So essentially, you've got a nice pennant formation, very simple to draw, just drawing the overhead resistance, the support. You've got a pennant formation. So we're looking for either a breakout to the upside or a sell-off here. So we've had a significant move on natural gas, V-shaped reversal pattern over the Christmas holidays. And now what we're looking for is a resolution, either a continuation pattern to the upside of this recent breakout or a sell-off. Now, if you go over to the monthly charts, you'll see we've defended a major area of support on the monthly chart. So just going down to 1.864, you can see we've got a really strong rejection candle on the monthly. So if that starts to follow through, potentially we really start to pick up momentum to the upside here. So that's worth having on your radar as well, just for natural gas. Now, what I'll do, I'll bring it just back to gold again here. So gold really off to the races today. Look at it, 1,104. So as I mentioned earlier, really looking at 1,111 as the next key level of resistance. We'll just go back again, just bring a little bit more detail for you. So let's have a look. Yeah, 1,111 is our next real key level of resistance here that we're looking at the moment for gold. So again, just for those of you who join us a little bit later in the session, you might have missed just the headlines on gold at the moment. We'll just go over to that. So essentially gold hitting 9-week highs as China worries hit the stock market. And we've just seen a tremendous move on gold this week. It's been a really good trade, one of the top trades of the week. So really the main plays that we've been involved in this week, we've got some sell shorts on the grains at the moment, particularly wheat. We've also been selling Brent crude oil in particular and going long gold. So gold's represented a really nice breakout trade at the moment. Now we do have non-farm payroll tomorrow. So we're going to be looking very closely at how these markets close tonight, particularly gold. I want to see whether gold really does get some additional momentum up to about 1,111 around that zone. I would anticipate that tomorrow we'll see some profit taking before non-farm payroll. It's only natural that traders who've been long on gold here since the beginning of the year or over the last couple of days, they'll potentially be a bit nervous about the numbers coming in for non-farm payroll. So I would anticipate some profit taking ahead of tomorrow's non-farm payroll, and then we're likely to get an explosive move off the actual non-farm payroll announcement itself. So we'll be looking to take advantage of tomorrow's non-farm payroll. And also have silver on the radar as well, because silver is forming a nice little box and a consolidation zone at the moment. So definitely for me, that's worth having on your radar as well. I will double check if there's been any additional questions at the moment. Let's just go over to those questions. Okay, good question. So we've got a question. When you talk about break and a close below, are you referring to a daily close or a H1 weekly close? Right. Okay. So H1 or weekly close. Okay, great. So when I'm talking about a daily close, so if we go back and we'll have a look, for example, let's look at, we'll move it over and we'll have a look at soybeans. In fact, let's just go over and probably give you a more relevant example that we've had recently. Okay, this is a good example here that we've had on oil recently, particularly one of our trades that we've taken more recently here after the OPEC. Let's just get that. Okay, here it is. So this is what I mean by like a confirmed close on the market. So when you see a very key level of support, once you get a break and a close below that zone, so it's not enough. A lot of the time, and I'll try and show you some examples of where you get a false break, because often particularly when you're trading commodities, you'll get false breaks on the market that don't follow through, and you just want to watch out for those. So you've got an example actually here, just going back to soybean. So this is an example. You've broken through supports. You've got a rejection candle, an inverse hammer on the chart. Essentially, it looks like it's breaking down. And then yesterday on soybeans, you've got what is known, what we refer to as a bear trap. So the market broke down, but then it reversed and it closed with a bullish engulfing candle. And that is obviously probably potentially would have stopped out traders looking to get into that on a day trade basis. So what I want to see here is not only a break, particularly when you're trading these sort of box setups or consolidation setups, is not just a break below support. It needs to break and close below it for ultimate confirmation. But otherwise, you can see there's been another false break here of support. You'll get whipped out of the trade very quickly. You can see here on soybeans where you've had a breakdown in mid-November. You've broken key support below at 850, but essentially it's been bought back up again. That has produced a bear trap and it's closed bullish. So you want to see, particularly if you're looking at, let's say 1, 2 year lows, 3 year lows, 5 year lows, you've got big event areas around these levels where you can see some big orders go in. So I want a break, not just a break, a close below the zone as well. Good question. Is there a tell sign to recognize fake outs before it happens? Certainly, if you look at the tighter time frames, yes, you can. So you can keep an eye. So if you break it down and have a look, you can to some degree have a look at those in the 4 hour and the 1 hour. So you can see. I mean, we can go back to yesterday's fake out. You can see that quite clearly. You've already got the sign on the 4 hour chart. You can see support broken and this strong candle in the 4 hour already. That's a bullish engulfing on the 4 hour chart, which is then led through to a daily engulfing. This is a typical false break. This is what is known as a bear trap here. You can see you've broken support and then you just fully reversed. So yes, there are telltale signs, particularly if you're intraday trading and you've got the capability to break it down into the tighter time frames, the 4 hour, the 1 hour. You can see those moves a little bit faster, so you can anticipate it. You can be watching a level of support as it's been broken, and then just keep an eye out for big orders coming in, some potential big buys in the market, which are producing engulfing candles on the 1 hour, the 4 hour, and then ultimately the daily chart. And you don't want to get involved in that, because what that means is it's a false break of support, and ultimately the market is likely to rally in the opposite direction if that false break of support gets confirmed to the upside. So I would still wait on confirmation. So yesterday, although we've got a bullish engulfing candle, it's not confirmed yet. If this just gives back all of its gains today, if this candle which is developing today, it just gives back all of the gains and comes back down again and retests this level of support, and this on the second retest, it then doesn't find any support and just continues right the way through and breaks down, that opens the door up for a selling opportunity. For me, it's definitely one. You want to have an alert set at that zone for soybeans and just be aware when it hits that level to monitor it. And essentially, we'll be looking at the daily closes to see whether there's a nice trading opportunity. Okay, super. So I think that's answered those questions for now. If there are any more questions, do keep those coming. Just going back to, again, what I discussed just during mid-session there. Again, if you would like to find out more about the Private Traders Club, members get access to Master the Markets training course, the live trade setups forum, live technical analysis videos, inside tracks, the week ahead trading plan, and of course, VIP email support. All you need to do, again, is just go to www.theprivatetradersclub.com. Okay, excellent. So a couple more questions coming through. Okay, so when do you know your thesis is no longer valid? When you already have a position in the market? Okay, so that's a good question. So just going back to soybeans. So in this case here, if we have a look at soybeans, if you had got into a sell short, let's say you've been triggered into a sell short, I would be looking at this engulfing candle. If the price breaks above that engulfing candle, which is a bear trap, then I would look to exit the position. If I had been short and caught into this for a sell short incorrectly without having full confirmation, if I had been triggered into that trade, I would then get out on a break, because if this breaks out to the upside, that's confirmation that this bullish engulfing candle is likely to follow through and zip up to the next level of resistance. So at that point, I would be out. So that is at the point at which I would get out, and the thesis is no longer valid for a sell short there. Yep, perfect. Superb. If there are any more questions, do post those at the moment. Again, I'll just leave that link on the screen for you so you can get in touch very easily, www.theprivatetradersclub.com. What I will do actually, if there's any more questions, do post those now, and I will do just a wrap up. For those of you who joined us a little bit later in the session, I will just put together a bit of a wrap up here in terms of what we're looking at for the rest of the day, and also as we head into non-farm payroll tomorrow as well. Okay, so we'll go back over to gold and we'll just do a wrap up of what we're looking at on the gold market here. Okay, so essentially for a wrap of the commodity markets today, again, the big headline news has been gold has hit a 9-week high as China worries have hit the stock market. We have seen gold now breach and climb to $1,100 per ounce. European shares have tumbled. Asian stock market has hit 3-month lows. China's central bank has bought 19 tons of gold in December. So we've seen that so far today, gold climbing above $1,100 an ounce. In fact, it came all the way up to $1,104 an ounce for the first time in 9 weeks. On Thursday, as also the dollar fell, investors channeled money into safer assets as worries over Chinese economy has hit the global stock markets. Okay, a very important point there is that in China, the stock market fell 7% on Thursday after less than half an hour of trading, which triggered a circuit breaker that suspended trading for the rest of the day. And we've definitely seen a safe haven bid on gold as a benefactor of that as well, for sure. So we've seen gold often as an alternative investment during times of geopolitical and financial uncertainty, benefited from the risk-averse sentiment in the markets, along with other haven assets such as the Japanese yen and US treasuries. So just going back to what we discussed earlier on gold, we do have our longer term position on at the moment, which we've entered in at the beginning of the week, which is moving well. We are looking for the next key level of resistance here up at $1,111 per ounce. So we are getting good follow through at the moment. We've managed to close above that critical 50-day moving average. We've had a double bottom, a double base form on gold from the end of December, and you can see here where we're bottoming out nicely, and we've now cleared above a lot of resistance. This whole resistance zone above at $1,083 an ounce, which was capping the price really over December. And then this whole area, 1,088, has now been broken out of. We've now also cleared above 1,098. So we're back above that key psychological resistance of $1,100 per ounce here on gold. And we're looking for a potential rally and follow through to 1,111. We've got our longer term positions on, which we've been in just since the start of the week here, as we've been anticipating this January effect move. Now, at the moment on gold, I would also just have on your radar, we've got non-farm payroll coming up to tomorrow. So with the significant gains that we've seen on gold so far this week, if you look at where we've really broken out from on gold, it's moved over 410 points to the upside. I would anticipate just prior to non-farm payroll tomorrow some profit taking, but it's really down to how much further we'll be rallying today on gold here. But I would anticipate some profit taking, or at least some consolidation here prior to non-farm payroll. Non-farm payroll should be quite explosive as well. Silver is one to look at for non-farm payroll. So at the moment, silver's lagging behind gold. So if gold continues the momentum to the upside, I would then turn your attention over to the silver market. We've got a nice pennant formation, which has the possibility of a nice breakout as well. If it continues to lag behind gold here, we could get quite a nice breakout trade on non-farm payroll tomorrow. And also on oil, we continue to be in our longer term positions for a sell short on oil, particularly Brent crude oil. It's offered another breakdown trade this week, nice day trade for a sell short of key support here. Again, just if you missed that a little bit earlier, the headline news at the moment on the crude oil market, Brent crude oil has slid below $33 to near 12-year lows as the turmoil in China has rattled investors. So we've seen Brent and WTI crude oil fall more than 5% before trimming their losses. US crude oil at lowest prices since 2003, and technical analysts scoping more downside. We're certainly doing that, and we're looking out to the higher timeframes now. So you can see at the moment where oil significantly breaking down right now. We've taken out major support from 2008, and then really we've got this major level going back to 2000, and also resistance from 2003, which is oil is testing at the moment. If we do get a breakthrough 32.50 here, we would be looking for the next psychological support zone of $30 per barrel. But in the short term, we anticipate a little bit of profit taking around this zone. It has come back up to key resistance from 2000, and this is now a key resistance zone from 2003 turns support. So we're getting a bit of a retracement along this line, likely to potentially get some explosive moves tomorrow as well in the lead up to non-farm payroll. So it's definitely going to be one to monitor too. Okay, good question. We've also got another question just about gold here in terms of the January effect. In what way does the monthly January effect change affect normal routine? Okay, so the January effect is where you see a lot of fresh cash injection into the market, which particularly if you look at historically affects the gold market. So gold, if you look at the last couple of years, we've had significant moves. At the beginning of last year, from the beginning of 2015, the first 3 weeks of the year, gold rallied 1,500 points from its low to its high point. And if you go back to 2014, the beginning of the year there as well, we rallied over 900 points in the first 3 weeks of the year. Ultimately, actually, in the first 2 months of the year, gold rallied 2,000 points from the beginning of January through to the end of February. So it's a move which traditionally tends to affect gold the most here, where you see this fresh cash injection. You always need to wait for confirmation, though. You need to just make sure that we are going to get a January effect move. It's not guaranteed every single year that it will happen, but this year in particular, we've been anticipating it. It often tends to happen when we're coming off major lows for gold. So gold, we've just come off December from the FOMC statement where gold came very close to retesting its 5-year lows, and gold for last year, for 2015 year to date, it dropped over 10%. So it was already at a good opportunity to buy gold at the start of the year without all the geopolitical factors that we have at the moment. We just needed a catalyst really to bring gold up, and gold's had this typical move of where it's broken out the first day of the year, it's followed through, cleared the 50 MA, building up good momentum, and you're seeing today again another good wave. Typically the biggest move on the January effect happens in the first week of the year as well. It's something that we anticipate every year, and we've really followed this nicely through this year as well. Can you apply that for other markets, or is that only for gold? It's primarily for gold. It does apply to a certain extent to other precious metals. Gold is the biggest mover typically at this time of year. So we've traditionally always traded gold for the January effect. I would say if you have a look across the precious metals spectrum at the moment, you'll see gold is the best mover right now. Silver is potentially getting ready to follow suit. Platinum's a little bit more work to do here at the moment, but gold has been the biggest mover so far. Traditionally, gold is the best mover for that as well. Okay, fantastic. I don't think there are any more questions at the moment. So what we'll do, we'll just wrap it up there, guys. It's been a fantastic session today. As I mentioned earlier, if you would like to take your trading to the next level, you're very welcome to go ahead and just go to www.theprivatetradersclub.com. Membership is by application only, so it's just a case of completing the enrollment form, and we'll get in touch with you ASAP. And we'll take one more question before we wrap up. Do traders really use the first week price action as a tell of what to expect for the rest of the year? Right, so do they use the first week to anticipate what happens for the rest of the year? I think this really comes down to a good knowledge of seasonality factors. Particularly, we're specialists in trading commodities, so I'm well aware of what each of the commodities do at different times of the year. So I'm not necessarily looking at the start of the year to get into a longer term position and just stay in it all year round. I would do if technically the trend maintained and continued that way, and my trailing stop just continued to be followed down or up with that particular trade. But I'm very aware of seasonal factors. I'm very aware that oil is likely to reach a bottom over the month of February. It does historically, that's a time of year when it does. I'm very aware that you've got the Chinese New Year coming up in February, where you'll see a lot of gold bought up to the Chinese New Year, but on the after the Chinese New Year, you've got the Chinese bank holidays where they'll be closed for trading in Asia, particularly in China, for over a week, and you'll see the support really taken out a lot of the precious metals over that week, because overnight trading is not there to support the precious metals. You'll see pullback. So it's just a case of really understanding what each market does at a different month of the year, which will really help you to be more at flow with the markets and not necessarily looking for buy and holds at the start of the year to stay in those all year. We're always nimble on the markets, well aware of seasonality factors, geopolitical factors, fundamentals and technicals. You marry all of that together with a very good trading strategy and you'll be profitable. Yep, great stuff. Thank you, guys. Been a great session today, and look forward to see you all on the next one. Okay, so it's been a great session. Great to be back, and we'll talk to you all real soon. Okay, thank you, guys. Cheers. Bye-bye.